Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets. This is a tricky week, or specifically a tricky Monday to do a Monday Markets, because first of all, nothing's really happened since last week. We're pretty much around the same price from where we made that video, so not a whole lot going on there. More importantly, if you look at the calendar for this coming week, tomorrow there is CPI, on Wednesday there is FOMC and the presser that follows, and Thursday there's some Bank of England and ECB stuff. But so for both US and Europe, important stuff in terms of macro drivers, CPI, FOMC, the golden duo there. So a lot of price action, if we're going to get volatility, which has been very much lacking, my expectation is that we will, but it will likely be catalyzed by these macro events. So the headlines are definitely sort of busy coming into the next 2-3 days. And also, one thing you can do to get a sense of crypto specific flows is to look at weekend price action. And so, for example, the assumption being there that if you have crypto native flows, you're going to get movement when the legacy markets are closed and you don't have any headlines, any of that type of stuff. Instead, as you can see, this entire week has been really gruesome in terms of vol in general, but also specifically the weekend period was among the lowest of the already low volatility. So that's to say there's nothing specifically on the crypto side that's sort of pushing the market around, and that makes me give more weight to sort of macro legacy factors, which are very much stacked towards this week. The way I generally approach these things is, at least for the last few months, I try not to trade the event itself. Sometimes I get itchy fingers and I might want to pump, but realistically speaking, what will often happen is you'll have short-term volatility around the specific news release, but then a lot of the time after the dust has settled, price is back more or less where it started. So that's kind of the behavior we've seen with a lot of these short-term flows, and it does tend to be kind of mean reverting in general. I've had expectations in the past that, this will kind of determine the trend or provide greater clarity, but for the most part it hasn't. Again, I think the one exception there is if we get some really surprising economic data, which then might drive the technicals through much more important levels. But for the most part, again, because these are sort of headline-driven events, and liquidity is already low enough in crypto as it is, the price of being wrong if you're trading into the catalyst itself is pretty damn high. Your sort of stop, especially if you're using a market order, is probably going to get filled at very ugly prices. Latency is higher, and it's just not a very good time and place to trade unless you've got a very compelling thesis. So two things you can do is either just ignore all the headlines completely and get a clearer view after the CPI FOMC combo. So that would be from Wednesday afternoon/evening onwards, or you could just simply leave it, very headline-driven week, let the dust settle, and then do some sort of Monday range and kind of trade next week with more clarity. The reason these events tend to suck from a liquidity point of view, again, from a market microstructure perspective, going into the news release itself, especially if it's going to, if liquidity providers, market makers, or even traders sort of don't have an edge or want to react after the fact, the books get thinner because there are fewer quotes closer to the price itself. So the spreads widen, the quotes are smaller, there's less liquidity, and in those kind of circumstances, market orders themselves have a much, much larger price impact, and also that means your kind of market stop will get a far worse fill, and it's just not a very good condition under which to do a lot of business, especially if you get caught being wrong. You could argue, well, we haven't had vol in so long and we're finally going to get a move, I might want to trade that. Yes, there is the potential for more upside because of the injection of volatility, but the price of being wrong is also increased because the chances that you're getting filled anywhere near where you want to get filled those chances are also reduced. So it's a bit of a shit show, to put it colloquially. Crappy liquidity conditions in themselves erode edge. So if you're going to trade it, either trade it once the dust has properly settled, sort of later on in the week, or at least let the headline number come out, whatever crazy wick price action to happen, and then if you have a stronger directional view, you can sort of take a stab at that. That's at least how I like to think about it. Now, as to the chart itself, not a whole lot has changed on the Bitcoin front, as you can imagine. I won't go to the monthly because that's barely moved. On the weekly front, sort of last week closed red, and structurally, again, just as a quick reminder, this hasn't yet reached any super structurally relevant levels, which for me on the weekly chart, at the very least, are at 20k, which is the broken support turned resistance previous cycle level, and then the much deeper pullback levels are sort of 12 to 14k, Those haven't been reached either. That's your kind of monthly and weekly structure. So in terms of my swing strategy, there's really nothing for me to do here in terms of when viewed through that lens. So we have to kind of take the market for what it is. If we do go to the weekly time frame, is there any structure to work with? There may be small hints or some things here or there. One thing to note from last week's price action is that it spiked above previous week's high and closed below it. So that's some form of not necessarily a swing failure, but just some sort of spike to be worth to keep in mind. Generally speaking, if you get this type of reversal pattern and it's going to follow through, the normal target for that would be previous week's low. You can use this with an inside week where you're looking at the inside week high and the inside week low. One example would be here, where you had a spike and close above inside week's low, and then it went into the inside week's high. Oops, excuse me. So sometimes you get those setups kind of contextualized by specific price patterns, but other times you can also just look at the high and low of the week and get some sense of directional bias there. At the moment, even if we employ this type of framework with this impulse candle's high and last week's low, the market's right in the middle. It's not a whole lot to do there. Just being aware that, if this week closes red, just like you had a swing low structure here, you might get a swing high structure on the other side. Again, very speculative, and I'm really sort of reaching here because, again, the market really hasn't moved all that much. But be aware that if we start to push down, at the very least, last week's low is the first area for a potential kind of spike, and to see who or what is hanging out below there. On the daily time frame, I feel like I'd be insulting your intelligence by analyzing this too much. I mean, look at it. The market just didn't move. Right, the market didn't move. So what are we left with? We're left with the same daily range that we've been paying attention to for some time, contextualized by this kind of dump and then CPI candle price action, where the range low, as always, 15.9, range midpoint 16.7, range high still untested at 17.6. I'm not comfortable assigning any probability for this consolidation being a pivotal support or resistance. It could, but the level just isn't cutting it for me, and I'm not terribly interested in trading more at this consolidation than the market has done already. Again, first of all, higher time frame perspective, as you know, with a range, generally speaking, if it breaks, you're trying to assess whether price will be accepted above it, in which case it's going to move in the direction of the break, or if it's not, then you kind of trade the deviation. So any daily closes above 17.6 would be bullish breakouts. Any daily closes below 16K would be bearish breakdowns. And then you kind of give the market a chance to for that to play out, and then if it fails, you basically change your tune. So for example, if this were to close above on the daily and then fall back within, that would be bearish. If this were to close below and then fall back above, that would be bullish, so on and so forth. But we're still stuck within this consolidation, and generally speaking, when it comes to my approach, I don't like to diddle in the middle, which is shorthand for saying do business at the range midpoint. Generally speaking, you want to do business at the extremes, at the boundaries, where you're going to get the most participation and the best proximity to invalidation. On this occasion, we don't have anything of the sort. The only thing that might come to mind for a very, very short-term trade would be around the range midpoint. Again, you don't diddle in the middle, certainly not for swing trades, but at least for short-term trading, reaching these levels would be some sort of meaningful move. So for example, a move into the range midpoint that spikes this kind of double bottom we set just above the level and then kind of closes back above, that might be a decent swinger towards halfway into the range and the range high. So again, I guess the zoomed out version of that idea, if 16.7 wants to act as support, there may be short-term bounces to be had from there. Otherwise, I'm probably going to reserve judgment until we trade more at these range boundaries in order to come to some sort of conclusion. So strength above 17.6, I'm entertaining the idea of a deeper push towards kind of pre-breakdown 18, 19K levels. Similarly, daily close below 16K. I then have to entertain downside continuation from the consolidation, but I'm just getting far too ahead of myself. Those determinations can only really be made if the market, or when the market reaches those extremes, and at the moment we have nothing to work with as far as that goes. So in terms of outlook for the week, kind of be careful for the headline volatility, especially if you have no edge or no experience trading it. In terms of short-term pivots, I've still got the range midpoint at 16.7, which seems relevant. I'm just trying to see if there's anything else that I want to talk about, but unsurprisingly, even on the 4 hour, given how compressed the price action has been. You can see that our daily range is mirrored pretty much perfectly on the 4-hour time frame as well. So all those arguments made on the daily time frame, you can simply expand to the intraday time frames. You'll end up more or less in the same neighborhood. Now, and just as a quick general point, that's what you're left with. You have headline bombs coming this week, and you're diddling in the middle. Like, how much of an edge are you really going to have? For me, at least, the answer is not a whole lot. As far as ETH goes, I'll bring up a blank chart momentarily. Let's take a look at this. So as far as ETH goes, sort of similar. I mean, unsurprisingly, hasn't moved all too much since last week. On the weekly time frame, price is still grinding against a level which I'm sort of running out of patience for, which, as you'll recall, is this weekly sort of underside at 1.3k or thereabouts. Basically, this low or this structure that preceded this tiny spike up. Well, it's not tiny spike. This lower high before the lower low, and now that's being retested. I think this argument is most evident using a line chart of lower highs and lower lows. High, low, lower high, lower low, lower high, lower low, and now it's kind of at resistance again. Potentially this is the lower high. I could see a world in which it squeezes a bit further for a lower high as well, perhaps to the 1400 handle here, which would make for quite a reasonable lower high as well. But in any case, even if I'm going to take that kind of market structure counter trend play, I can't do it at resistance. There's sort of nothing there at the moment. The market's just kind of been hard stuck in more or less $100 range, which is depressing. But in terms of weekly structure, yeah, I think the two main points to be aware of is that the weekly market structure is bearish and the short-term pivot is still at 1.3k. So that's worth bearing in mind. So even if you were to get a sort of bullish trigger at 1.3k that allows you to catch a leg higher, I think that leg higher has to be contextualized by the existing market structure, which is down, sort of lower highs and lower lows. And then so you could, for example, then look at the most recent leg and look for a 60 to 70 or 60 to 80% retracement to get an idea of where that lower high area might form, right? Sort of in this retracement block, and you can see that it more or less lines up with that sort of previous low. So that's, again, I kind of have to, this live stream or this video, look into the future because the market really hasn't moved much. But I hope those types of longer term determinations or projections to some extent or ideas are helpful. And obviously, if the market does start to move, we'll cover those in more detail. But this is sort of where my head's at. The first meaningful shift in market structure, as a logical corollary of all of that, would come with a higher high above 1.6k. That would break this multi-month trend going all the way back to August, and that would itself be a very meaningful signal. So if you're looking for weekly signs of reversal from a market structure point of view, the earliest that can happen is above 1.6k, which seems like it's far away, but that in itself would be a big enough signal, to still be worth it and still be actionable. As far as the daily goes, using the same structure that we did for BTC USD. Again, it's basically at resistance or still in the same area. The market was stuck at this 1.3k range high, and it just hasn't really moved from there. I could be cheeky and say that there's a bit of a short-term level coming in at 1.250s as the sort of low within the range. But again, given my volatility expectations for this week are higher, because of all the headlines, I'm not really expecting this level on its own to be particularly worth trading. You can see that the dip on ETH was shallower than it was for BTC, at least from a structural point of view. So similar to BTC, if there's going to be any type of bounce to be played on the dump throughout this week, I think it has to come from the range midpoint level at sort of 1.1, 1.2k. That's where I'd be looking for daily strength, intraday strength, whatever out of the multitudes of entry triggers I've covered on the Cred channel, on this channel, etc. That's really the first reasonable area for a bounce. Doing business here to me makes no sense. Even if we look at it from a structure point of view, we've moved off resistance and we're not at support, and vol is dead, so really what are we doing? So that's kind of the map for the market. In a similar vein, more commentary will be provided once we actually trade at or around the extremes. For the time being, if there is a breakout with some sort of acceptance or just a break consolidation and the market doesn't get stuffed at 1.3k, I think there's a decent leg to catch. And I say a decent leg, I mean, given how compressed everything's been. That lower high scenario takes us to this multi-time frame level at 1.4k or thereabouts, perhaps as high as 1.5, but this would definitely be the first trouble area. So if the market's bullish, I'm going to look to catch some portion of this leg, which is, 10 to 13%, whatever it may be, depending on your entry and so on and so forth. So, at the very least, the daily close through the range high would make that idea valid. As far as the range expansion to the downside, it's very self-explanatory. I think any weakness at the midpoint, and then we're in business to, if not test the range low, perhaps even go as deep as spiking this double bottom. So anything bullish to me has to be predicated either on a daily close above 1.2 or above 1.3 or good price action at 1.2. That would be the sort of cases for optimism. I think I might have misspoken there. Anything that would look good, daily above 1.3 or some sort of support at 1.2. Anything else, I'm not interested. Anything bad would be a failed breakout above 1.3 or any breakdown and acceptance below 1.2, and then sort of the double bottom becomes juicy. Again, very boring. Sometimes I almost regret making these videos because I'm like, Christ, man, the market just hasn't moved and it's all the same ideas as last week. But sometimes that's just what the market serves you up, and perhaps some of you may find it conceptually useful to go over these ideas again. And again, I'm also very happy to answer any comments you might have about anything I've said, so leave those as well for us. Subscribe, like, do all that sort of stuff. It should be no surprise, therefore, that given my focus on the majors, I'm not terribly enthused by altcoins for the time being. This BNB range ended up being quite helpful, the one we mapped out between 304 and 260s. More rumors swirling around Binance and all sorts of headlines this week. I'm open-minded, actually, to playing a bounce from the range low if it sets up appropriately and there's something there. If it's at the very least in line with my market view elsewhere. So, if I think Bitcoin and ETH are going to go up and BNB looks sufficiently good, I might punt that. I definitely want the headlines to dissipate a little bit because you can see it's a bit of a, it's definitely weaker than some of the stuff on the watch list. So I'd want that kind of supply overhang to go away. But purely technically speaking, 267 is still support. So I'm open-minded towards playing bounces from that level. If it sets up, and the first trouble area would be the range midpoints. That's kind of something that's there structurally. That's worth bearing in mind. I mean, the range high was very good. It overshot and then gave a nice backside retest. So I'm assuming the range low maybe is still useful, especially given it's already done its overshoot portion. So if this is going to be support, it's more likely to be support on the first test, and I'm not expecting a deviation as much. I think if it starts to deviate and close below, it's probably screwed at that point. So it's more of a early price action type of setup. I don't think there's anything else terribly interesting there. And again, that's all very contextual. What does BTC look like? Has the FUD blown over? So by no means one of those blind set and forget exercises. Everything else I'm not terribly keen on or particularly interested. Again, the majors have my focus. Dogecoin be bleeding out a little bit. Litecoin, just follow Don on that one. He's balls deep and figuring stuff out. And I mean, that's just consolidating. That's not at a level. That's still below the 14 weekly level, not interested. Ape has been more interesting. I think there's some news I'm not entirely aware of with regard to the staking that's going live. I need to read more about that, but it doesn't immediately look like I'll have a setup on this thing. But maybe next week we have some clearer price action. It doesn't look immediately terrible. Like even just based on the 4 hour, if we take this pivot of lows and highs, that seems to have broken out and is at the cusp of retesting. I think this is going to be one of those which tricks you into thinking the chart matters as much as the news. Like, if we get a good sort of bullish resolution to all the headlines with CPI, FOMC, this thing's going to pop up like the rest of the market, and you're going to feel really clever for buying the retest. In the same vein, if the news is bad and this just pukes through, you're going to feel really clever and say, aha, I knew it was a deviation. The chart said it all along. But, this is one of those cases where the market's going to be pushed around by things where you don't have an edge, such as economic news, and then you can control for that. But it'll make you feel either very stupid or very smart, and it's not purely kind of setup dependent. So that's just kind of, know what you're trading, I guess, is what it comes back to. But purely technically speaking, this isn't a terrible pivot to work with. You can see more broadly the market's just kind of still respecting this consolidation between 390 and 420. So usual range trading shenanigans apply there. And again, I think any medium-term trading strategy has to be built on the back of having the correct directional view on BTC and ETH, especially in these conditions. Like in the bull market, it doesn't matter as much because there's just so much volatility and so much dispersion, and the flows are completely different. You can kind of keep BTC and ETH on the back burner and trade your altcoins. I think now with volatility and credit compressed and correlations up, especially within crypto, you just have to pay attention to BTC and ETH. You've got no other choice, really. As far as the legacy world goes, it's okay. I think we've spoken at length about the weekly pivot at 3,900 or thereabouts. Now, last week the market came into it, and it came very close, but it didn't really spend a lot of time at the level. And I think the most recent dump narrowly missed it. And this is this is yesterday's low, and then if today closes, sorry, that's the weekly time frame. So it did spike previous week's low and previous day's low, and it's green today. I wouldn't be surprised if there's any bad news for some sort of deeper wick through this 3,900 level, and then to make a determination in the subsequent days as to whether this level is going to be support or whether the market's going to accept below it. I still think on a weekly and daily basis, this is kind of the line in the sand. For me, 3,900, really good level, really clear range high above it at 41 or maybe all the way up to 43, but 41 for sure is the first trouble area. But I think any ideas are contingent on this 3,900 pivot holding. You can see it's a really big weekly level, going back all the way to the highs from last February, and especially, and I guess this is, this carries more weight, sort of more recently, you've got highs, lows, highs. This is a level that really matters. So in terms of daily and weekly time frame price action, especially with so much news coming up, this needs to resolve favorably. Otherwise, there's that's going to be an extra tailwind for crypto to contend with. If it does resolve positively and you're looking for S&P guidance on where to take profit on your crypto longs or whatever else, I really think there's a big. The first real inflection point is around the 41 handle, 41.30, 41.70. I wouldn't really hold anything too far beyond that. But yeah, again, it's one of those weeks where there's just a bunch of headline risk and tape bombs coming, and I have no edges to the CPI FOMC, so you have to kind of let the market settle and then see, assess the damage, what levels are broken, what's been reclaimed, where have we ended up, is price sort of trending, or after the news is there a sign of sustained momentum, or is it all just very mean reverting garbage? These are things we can't know in advance, but given how appalling the last week has been, and with the catalyst conglomerate that we've set up here, if it's going to happen at any point, I think it's over the next couple of days. So I think for sure Don's stream on Wednesday and Casual Friday will be very instructive, because we'll have a chance to have the news behind us and hopefully a clearer view as to what held and what didn't. I think that's all I've got. I mean, dollar's still pretty much in the same place as well. Did break a bit lower, but still consolidating. Not much has changed since last week. Keep an eye on these headlines. Make sure you don't blow up. Be aware that trading the news release is always a bit of a different kind of liquidity environment. If you want to trade on the day, that's totally fine. Maybe just give it slightly after the news release if you want to get in, and for liquidity, to get a bit better. Otherwise, if you want to stay out and see where the market is on kind of Wednesday evening, Thursday, going into the weekly close, that's fine as well, and that's likely what I'm going to do. Thank you for watching. Hope this was helpful. Leave me a comment if it was. Thank you for all the likes, subscriptions, so on and so forth. trletter.com, free newsletter comes out tomorrow, all the usual stuff. Hope you all had an excellent weekend, and I'll see you next week to assess the carnage or the green candles. We'll see where we end up. Cheers.